I won't stop till I hear him say,
Okay, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, and foreign exchange, please go ahead and consider subscribing to the YouTube channel. Guys and gals, don't forget that when we do reach 10,000 YouTube subs, we are going to do a giveaway. We are going to give away 100 XRP to one lucky YouTube subscriber, and then we're also going to pick one lucky YouTube subscriber to win a CYPRX hat and a CYPRX t-shirt. So make sure that you guys are subscribing to the YouTube channel. It's easy to do so. All you have to do is click that subscription button. Blessings to you guys all for returning to the page. In today's video breakdown, as you can see from my charts, we are going to go over a Bitcoin trade that I placed on my leverage CYPRX account. Personally, I'm not seeking to add any more long-term positions on any of my long-term holdings via XRP, QNT, XLM, HBAR, Casper, things of that nature. Right now, I'm waiting to see if we can get a further dip below June lows. And if we can, then I will seek to allocate funds into my long-term portfolio. However, right now, I'm just day trading on my leveraged CYPRX account. That is the broker that I like to choose. I don't have an affiliate link for them. I try not to do any type of affiliate work for any kind of companies or anything like that. There's too much spam in the comments. Guys and gals, we do not have a Telegram. We do not have a WhatsApp. We only have a private Discord channel. And the only way to have access to that is by enrolling in the CYPRX mentorship program. That link is in the description down below. You can visit cyprx.teachable.com. If you want to schedule a FaceTime or a Zoom with me, you're more than welcome to just by emailing the customer support email down in the description below. Be careful and be vigilant. All right. There's a lot of spam in any cryptocurrency YouTube channel, right? In the comments, there's people spamming in individuals, okay? If you actually want to reach out to me and schedule a call to feel more comfortable before enrolling in the CYPRX mentorship, you're more than welcome to. Again, just email the support team, okay? So without further ado, let's jump into today's video breakdown. I exited this trade at about a 1 to 2 once we grabbed liquidity from early New York sellers. So I'm going to break down this trade for you all from the higher time frame and then go down to the 5-minute and then the 1-minute for entries. We're going to go over manipulation. We're going to go over key areas of interest. We're going to go over higher time frame utilizing the 15-minute analysis to kind of correlate that with our confluences on the lower time frame. Guys and gals, if these video breakdowns are helping you understand price action a little bit better, remember that technical analysis is not all that it takes to become a profitable trader. You need to have a proper mindset. You need to have a mature perspective in this market. You cannot come in here thinking that you're going to become a millionaire overnight. Go back and watch my previous YouTube video post from this one, and it explains one of the secrets to making money and having longevity in this market. All right. So without further ado, let's jump into today's video breakdown. Okay. So let's start on the higher time frame, i.e. the 15-minute. Let me try and move myself out of the way up here so that way I'm not blocking any of the price action. Okay, so coming into this trading day, you guys know that how I like to analyze price action is I like to say to myself, what did the previous sessions do? What can past price action tell me about what might happen in the future or what might currently happen in today's trading session? Okay, so I like to utilize the piggyback methodology and I like to look for areas of liquidity. Why? Because banking institutions are more likely to buy from an area of interest where they bought from previous sessions, and they're also more likely inclined to grab liquidity traps before they do purchase or sell price action. And this scenario here on Bitcoin was a beautiful setup where we have a previous area of interest from a previous New York and Asia session low where banking institutions injected money into the market. And then we also have an area of liquidity that we were seeking for the banking institutions to come and grab before placing more buy positions on top of Bitcoin. Okay, so here I just want to take your attention to this New York session. This was June 30th. This is the last day of the month, right before we rolled over into July, and we saw a massive injection of liquidity into Bitcoin. All right. So on June 30th, price ran from roughly around $18,600 to roughly $20,800. This was a massive injection of liquidity into the market for the last day of the month. So all I was simply doing was tracking this price action. I highlighted from the candlestick bodies down to the wick low and extended that price action all the way over. And I was saying to myself, at any given moment in time, if I'm going to look to trade New York session, I'm going to seek to see if we can take buy positions from where New York session previously bought from. So after that run on June 30th, all I was simply saying to myself was, can we seek a further discounted price to take further buy positions on Bitcoin? And we got a beautiful buy trap scenario where we can see here during London session, the London session created what? a double bottom formation or a retail supported formation, where most of retail traders during London session were most likely buying these areas here. They were drawing some type of retail support or retail, double bottom methodology pattern. I don't even know, guys. You guys can go on babypips.com. There's a whole bunch of YouTubers out there that cover this pattern. It is a double bottom formation, or they call it a W formation, right? Where they expect price to reverse and go back to the upside here. Here at CYPRX, we look at this as a retail buy trap. And you guys can see here that during this Asia session, the market makers came and liquidated any over leveraged players that were in the market during these buy trap scenarios. Okay. So after we saw the market come and liquidate all these over leveraged buyers beneath these lows here in the form of this double bottom pattern, all we were simply saying to ourselves was what Asia session did. Asia session, as you can see from the area that I have highlighted, again, from New York session on June 30th, the last day of the month, we can see that right before New York session rolled price action over to Asia session, where Asia session pumped liquidity into the market during their period of trading. You guys can see, taken from the candlestick wick up into the body, highlighting that whole entire area of price action, and extending that over. The logic surrounding doing so is that if the banking institutions return to this general vicinity, or at least if we take our Fibonacci, again, our Fibonacci tool is a tool to measure where institutionalized discount is most likely going to be, or where institutionalized premium is most likely going to be based off of price action. Okay. So if we take our Fib from the low all the way to the high, and again, this has to be a market breaking structure. You guys can see here how this high broke a previous market structure bearish leg. Okay. So this is a new bullish leg on Bitcoin USD, right? So taking from the Fib low to the high, we extend that all the way over, and you guys can see how price came into discount. And multiple times there were buy scenarios. London session bought at around a 79% discount. You guys can see here, London session added to their order, bought from another 79% discount. You guys can see here, Asia session bought from a discount almost at around 90% discount. And now coming into this New York session where we took this beautiful trade, New York session banking institutions are taking buys from roughly around 80% to 79% discount from where they bought from during this New York session. So we'll go ahead and we will delete this Fibonacci retracement just to show you guys the logic behind why we highlight piggyback areas of interest, previous areas of interest where banking institutions either bought or sold from, because they are more likely inclined to see a buying position or a buying scenario from a previous area where banking institutions bought from, based off the ideology that banking institutions like to buy from discounted prices or sell from premium prices, right? 90% of traders like to utilize retail methodology setups, and those don't work. Remember, the charts do not understand patterns, okay? The charts do not understand a double top formation or a trend line or a shooting star. They don't understand any of that stuff. The market itself does not understand these retail patterns. The market itself does not understand an order block, okay? The banking institutions trade off of liquidity and psychological levels. And if you can understand those things, you can piece together a strategy that works in the market. And CYPRX is designed to do just that, okay? It is designed to involve yourself into the market after you see the market grab liquidity, which is a market maker signal that they are interested in whatever price area they are currently operating at. If you guys see them grab liquidity and shift momentum, then you have a higher probability to get in on that moving train, which is what we were able to capitalize on here during this trading session. Okay. So now that you guys have that full and entire 15-minute breakdown, you guys can see the liquidity that we were aiming for to come and get taken out of the market and see a shift in momentum. You guys can see the discounted areas that we were looking to buy from here on Bitcoin. Now coming over here to this London session, you guys can see that there is another London session low that we highlighted from the candlestick bodies down to the wick and extended that price action over. Why? Because we can see that London session bought from where they previously bought from in the form of discount. If you guys can see, look at this. This is where a London session low was. This is where a London session low was. And you guys can see this is securing the ideology that banking institutions like to buy from a discounted price. This London session low, where London bought from the third day, is lower than where they bought from the previous 2 days, right? This is a discounted price for them. So what did they do? They injected liquidity into the market after confirming discounted buy positions for themselves. Okay, so coming into this New York session, I'm gonna now take your attention down to the 5-minute chart. We have our 15-minute areas of interest, all right? Lower time frame price action analysis. We're gonna talk about the manipulation window, how banking institutions during New York session respected London session buy areas, and how we were able to target liquidity above early New York session sellers, selling in the form of a trend line or a double top formation or retail resistance or whatever it is that you want to call it, we were able to identify the manipulation window that I talk about heavily here on the CYPRX YouTube page. So again, here's that 15-minute area of interest where if the banks and institutions during New York session push price down into this area of interest or push price lower than this area of interest, what are they most likely going to do? They are most likely going to take buy positions from previous discounted areas. We have a discounted area here. We can also see where Asia session bought from the previous session right here at these lows. So if at any given point in time, New York session pushes price down into these lows, they're most likely or more likely inclined to take buy positions because it is a discounted price for them, okay? Not only that, but coming into this New York session, if I replay price action, what is another logical explanation as to why we were waiting and sitting on our hands for this trade? This is something that I heavily express to the CYPRX students. What happens or where does price action get passed to New York session at when the session opens? Where's price action at? Right here. Can you guys answer that question? It is at a high, right? We know that bank and institutional traders are not going to buy from a high. They're not going to continue to pump liquidity into this market from a high. Why is this a high? Because we can see where London and Asia session bought from the previous two sessions. We also have areas of interest where we know bank and institutions were taking massive buy positions from. We are not operating at either one of those areas, and we are operating at a previous high. As you guys can see here, this is a high, this is a low, this is price action operating at a high. Okay, now utilizing the manipulation window, we can also see trend line liquidity or a double top formation forming where the bank and institutions during their manipulation windows are building liquidity in the form of a double top formation or an M formation. So what are retail traders doing? They're drawing some type of resistance box here, and they're taking over leveraged sell positions above these highs. Here at CYPRX, we understand the form of manipulation in the market, and we have our areas of interest. So what are we doing as of right now? We're sitting on our hands to wait to see if price can break out of the manipulation window and respect the discounted areas from where previous London session or where previous Asia session or New York session bank and institutions bought from, okay? So as soon as we break out of the manipulation window, I just wanna show you guys how accurate the strategy is. Once we come into the discounted area and we see New York session take buy positions, then what are we gonna focus in on? We're gonna focus in on structure. We are going to see if we can see the market maker pattern, the only pattern that actually matters in the forex, crypto, commodity, indices world is an institutional grab of liquidity and shift of momentum. And after this pattern happens, we have a higher probability to get in on the moving train. If the market is going to continue up, it needs to do what? It needs to breathe, it needs to pull back, it needs to create a higher low after the grab of liquidity, and it needs to continue higher. We are seeking to get in on the move at this higher low or at a higher low after the significant higher low is created after the grab of liquidity. So let's see if we can identify this type of price action on the lower charts, the 1 minute chart, just to show you guys how accurate the strategy is if you're patient and you can pay attention to market maker patterns, real market maker patterns, not this retail crap that has flooded the market as of right now on baby pips, on all of these gurus, trading, mentoring programs that just teach you retail methodologies. It is all garbage. Wycovian theory, order block theory, support resistance methodologies, trend line trading traps, all of that crap is garbage. We teach a highly intuitive level of trading here on CYPRX that trades against all of that jargon, okay? The stuff that I'm giving to you guys on YouTube, if it's helping you out, make sure that you smash that thumbs up button. Let's dive into the lower time frame and see if we can see the market maker pattern. Okay, so we're gonna go down to the 1 minute chart just to see if we can see this pattern, and I just wanna zoom in for you guys. This is where our entry was. You guys can see how this played out. We have currently closed this entire position. It executed a 1-to-2 risk to reward ratio, which is absolutely beautiful. A lot of traders think that you need some 1-to-8, 1-to-12, 1-to-20 risk to reward ratio to become profitable. That's how order block traders like to teach their students to get these massive gains and these small risks. It's not realistic. If you can capitalize on 1-to-2s, 1-to-3s on a consistent basis, utilizing a strategy that works time and time again because it gives you an edge in the market, you can grow a portfolio. It is not hard to do, guys and gals, okay? Especially if you're approaching the market with logic. So watch how the market maker pattern unfolds extremely well during this Bitcoin New York session trading day, okay? You guys can see how we tapped straight into the buy area of interest that we had highlighted on the 15-minute chart from the London session candlestick bodies down to the wick, highlighting that area and extending that all the way to the right-hand side. Once we broke out of the manipulation window, we left behind trendline liquidity above these highs. So that was another catalyst to take buy positions and additional confluence onto our overall higher time frame confluences on the 15-minute chart. We have over-leveraged sellers in the manipulation window, selling from these trend line highs. As you guys can see, again, another trend line trap. Retail traders are like completely brain manipulated into believing that trend lines actually exist in the market. But you have to remember, banking institutions target those areas of liquidity because they know that traders trade those methodologies. So right here is where we see the market maker pattern. We see liquidity, we see a low violated. This little tiny wick right here violates these lows, and then the market breaks previous market structure, and bullish momentum completely engulfs the previous bearish leg that led to the wick beneath lows. So this is the market maker showing us an interest to grab liquidity from lows and make new highs. This is a market maker pattern. This is the same exact pattern that I just drew for you guys over to the right-hand side. This is the market maker showing us a willingness to grab liquidity from lows and make new structure highs. Now, as CYPRX traders, once the market starts to retrace, we can utilize our Fibonacci tool to react to where discounted price is most likely going to be. Remember, the Fibonacci tool is not some magical tool that's going to tell you where price is going to go out in the future. That is not what this tool is used for. Please, if you are following somebody on YouTube that is drawing Fibonacci sequences on their charts and telling you XRP is going to go to $100 because the 3865 hits this level and it's hit it in the past, guys and gals, please wake up. Please be mature in these markets, and please do not approach these markets from that perspective. You will get annihilated time and time again. It is not realistic. This Fibonacci tool is utilized to measure institutionalized discount. You guys can see here, once the market grabbed liquidity from lows and made new structure highs, and I've told you guys multiple times, once we see a retracement of 25% or more, that is when you can draw your Fibonacci on to start to say to yourself, okay, price might start to pull back. You guys can see where we executed the trade at. As soon as we see the grab of liquidity, the break above previous market structure, we have a rejection of a psychological level major, the 18975. I'll go ahead and I'll mark that on for you guys. So that is an extra builded confluence, 18975, boom, right there. Again, because we're trading Bitcoin against the United States dollar, we're looking at it to respect the quarter theory, right? This is the quarter theory to the T. It rejects 18975. We fail to get a bearish close below. We break previous market structure. Price pulls back into that area of institutionalized interest of 62 to 70 to 79% discount. We executed a buy position. This was a proper RR of a 1 to 3 is what we were looking for. We got a 1 to 2. And look what the banking institutions did. Exactly what I told you they have to do to carry price action higher. They have to pull price action back, and then they have to target pre-engineered liquidity. Pay attention to what I just said if you're still watching this video. Pre-engineered liquidity. Look at the manipulation window that we teach here. What did I tell you guys rests above these highs? Trendline liquidity in the form of retail manipulated traders who are selling trend lines. We also have a double top formation. What formed right here in the manipulation window? Look at this spike in liquidity right here, okay? And look at this double top formation. Here's an M pattern right here where retail traders were most likely selling from these highs. The bank and institutions were pre-engineering liquidity to come and take that liquidity. How can we identify that they were doing so? Because they showed us a willingness to grab liquidity from lows, respect a low where bank and institutions during London session bought from, i.e. the 15-minute tracking that I teach you guys on the YouTube page. They've rejected that and they broke previous market structure highs. This is an institutionalized pattern, the only pattern that makes sense in this market, where we can say to ourselves as traders, as retail investors that have no edge in this market except the edge that we create for ourselves. We have no high-end technology. We have no high-end news fundamentals that come out before the general public gets them, right? We only have ourselves, our perspective, our technical analysis, our emotional control, right? And our intellectual superiority to be elite in this market, to understand logic, okay? And if you can put those things together, you guys and gals, this stuff is like drinking water. It is not hard to do. So what are our confluences here? Okay, let's just go over them so that way you guys have a full list, at least the list that I can give you guys on the YouTube channel without disclosing too much information that wouldn't be fair to the CYPRX students, right? We have a rejection of the 15-minute area of interest here, okay? We have reason to believe, right, based off of logic, that the banking institutions are leaving behind liquidity during the manipulation window, which I've preached to you guys, happens before every single New York session, every single London session, and every single Asia session. It is pre-engineered liquidity, okay? We know now that the banking institutions are not going to buy from a high. As soon as New York session opens, they have price action at a high. These are all confluences. So what are we gonna do? We're gonna wait to sit on our hands to see if they take buy positions from previous discounted areas where banking institutions bought from the previous days. We got that exactly to the T. We also got a spike of a low. This low was taken out by this little tiny wick. That is another confluence. We have a rejection of the 18,975 psychological level that led to a market break in structure. This whole entire bullish leg from A to B broke this entire structure. Okay, so now we have reason to believe that momentum has shifted. If now we want to get on the moving trend, we need to start thinking about target areas and stop loss areas, right? And where we are going to enter in at price. Well, here at CYPRX, we like to enter in at institutionalized discount areas where banking institutions most likely like to buy from, which is 62%, 70%, 79% discount. We entered in at discount with our stops right beneath the previous low. Again, safe stops. Why? Logically speaking, if this market is going to reverse, it needs to break this low. So if the market breaks this low, then our analysis is incorrect and we will save ourselves some capital, only risking 1 to 2% on any given trade. Okay. And if not, and our analysis is correct, which you guys can see here that it was, we are going to come and target liquidity, which is exactly what I told you guys we need to do to continue the market higher. The market needs to set pre-engineered liquidity. Okay. The market needs to show us a willingness that it wants to grab lows and make new highs. And if it fails to grab that pre-engineered liquidity above New York session sell positions, we know that what they're most likely going to do is give themselves another discount and buy price to come and target that liquidity. You guys can see how that all played out to the T. CYPRX confluences, again, the confluences that I can give you guys on the CYPRX YouTube. I go into a more extreme detailistic perspective, over 60 hours of course content on the CYPRX material for the students. Again, make sure that you are paying attention to detail. Utilize your psychology to become superior in this market. Do not get manipulated into believing that retail pattern setups exist. That is just not it's not real. Okay, and if you guys are following YouTube traders who post Fibonacci sequences or take trades from trend lines or all that crap, you guys are going to keep finding an inconsistency in your trading. Okay, if you guys want a more logical perspective and a more logical approach, regardless if you trade crypto, forex, commodities, indices, you want to learn technical analysis properly while controlling your psychology, we have over 60 hours of course material. We also offer one-on-one mentoring once you enroll in the program, private group chat, weekly Zoom calls. Blessings to you guys all. I hope that you all have an amazing week coming into the first full week of July. I appreciate the love and the support. Don't forget that we are going to give away 100 XRP as well as the CYPRX hat and t-shirt once we reach 10,000 YouTube subscribers. As always, be cognizant, be aware, and I will see you guys in the next YouTube video breakdown.
I won't stop till I make a change. I withdraw on the things I make. I turn flaws into flawless traits. I build tall, never capped in space. I won't stop till I hear him say, oh, oh.